Hi, welcome to another episode of the Farmer First Podcast. I'm your host, Nick Custer. Today, I have the utmost pleasure of being joined by Tanner Winterhof, VP Loan Officer at Iowa Bank. Iowa Bank is an Iowa-based bank in central west part of Iowa with 15 branches. Tanner is also the co-host of the Farm for Profit podcast. Going to take a little bit deeper dive into that as well during our conversation. So, Tanner, first and foremost, it's great to talk today.
Hey, it's my pleasure. I appreciate the invite.
So I'm going to start off with the hard questions, if you don't mind, and then we'll go into the easier questions. First, what is your favorite episode of the Farm for Profit podcast? I personally have mine, but I wanted to get yours.
I don't know necessarily if there are favorite episodes. That's like asking a parent who their favorite child is. I do have some favorite people. If you go way back into the archives, I had an absolute blast talking to Jamie Pollard, the athletic director for Iowa State University. But more recently, I'm just a big Vance Crowe fan. So I would say our episode on helping yourself be a better negotiator with Vance Crowe, if I had to pick one, would probably be the episode.
Sounds good. I am definitely going to have to check out that one with the Iowa State athletic director. That sounds pretty cool. Pretty cool. I'm a U of I fan, but I'll give that one a try. I thought my bet was going to be that your favorite one was the one from 2019, the top list of songs about farming, which was a good one, a hidden gem.
Correct. We started off a little bit slow on the content creation side and did some borrowing of those top 10 lists. Those were good. Those are classics. We should probably bring that back and recirculate it.
So if I was listening to your initial episode of Farm for Profit, and it sounds like you guys initially had a conference that you guys did on an annual or quarterly basis. I'd be interested to know what kind of started out the conference and when did that start?
Yeah. So, I have spent my entire career in banking. So I had graduated with a business degree, went straight into working at a bank. And the bank that I came from at that time had always hosted farmers in the basement of their headquarters, brought in a couple of speakers, fed them a nice lunch, and kind of gave them a kickoff meeting every winter. And then when I switched financial institutions to move closer to family, the bank that I got to didn't have such a meeting. And for lender liability reasons, that's always something that hangs over our heads as bankers, asked if I would facilitate a meeting as such outside of the bank, which started the conference. So we did that. Started off with a small list of customers and prospects, invited them in, had a couple of local speakers come and talk about agronomy and cash flow and projections for the next year, some weather forecasts. And it started that way. But since COVID, so we did not have a conference in 2020 or 2021 formally set up, but we ran it there for about 6 or 7 years up until that happened.
And did David and Corey, were they like the first guest from the first year that you're like, oh, you guys are pretty cool, we should just talk more often? Or were they on the ground floor when you're creating the conference?
So Dave Whitaker, auctioneer and realtor, was one of the presenters at the very first Farm for Profit conference. It was actually called the Ames Ag Summit at that time, but we very, very quickly grew outside of the Ames area and switched our titling. But yes, Dave talked about land values and land trends during the first conversation. And Corey, I don't remember if he attended the first one, but he was one of the very first attendees of that first couple of years. Is kind of how we got connected there. Local farmer and local auctioneer and realtor.
Cool. I'd be curious. You guys have had the podcast going since 2019, I believe. And so I know there's this COVID in between, like you said, but has the podcast itself changed the conference at all? I mean, is it kind of like a reverse classroom, if you will, of like, oh, I can learn all this information, almost have my breakout sessions on the podcast every week or every other week. And then I have the ability to like go to this conference and just meet the people that I've been hearing about.
Correct. So we've talked about launching the conference again here as we get these concerns behind us. But I would agree, it spawned from people attending the conference asking for the information more than just once a year, which is why we did the podcast on a weekly release. And we're actually getting ready to release 2 shows a week because people are demanding to hear the information a lot more. But I would say the podcast would definitely shape the next event. If it ends up kicking off, it's certainly going to be more general session material with some great networking opportunities, just like you said, to meet the people who have been guests or meet fellow listeners that have the same ideals and thought process as you, more probably as a networking event than as criteria or information.
Cool. Well, I can't agree more. I can't plug it enough. It is a great podcast. I know this is the first time we're meeting virtually, but again, just listening to the show, kind of on binge, if you will. It seems like I already know you. I've already sat down and had a few conversations with you. So you guys do a great job there. Another thing you obviously did for us at Farmers Risk is you wrote a blog about kind of having a banker on the bench. Can you quickly just kind of go over that concept for folks?
So that was an idea of mine that spawned from the really competitive nature that banking is. So there's jokes that there's a bank on every corner, and it's hard to say it's a joke because it's a reality. Where I sit, I've got 2 right across the street from me. I got 4 more right down the street. I mean, you look at a competitive industry just like agriculture to where, it feels like if a farm goes up for cash rent, there's going to be multiple people interested in farming it. Same thing goes. If there's a farmer looking to change his banking relationship, there's going to be multiple banks interested in taking that business on. So the banker on the bench concept kind of came out of my childhood of playing traveling baseball, to where you might not get to play in every baseball game, but you need to have enough bodies on the bench for multi-day tournaments, for injuries, for unexpected things that come up. And as you sit there and gain perspective when you get older, that it's not frustrating to be on the bench. You're actually a team player and you can contribute more ways than not. I translated it into a way to potentially differentiate myself in the finance industry, that, okay, I'm not ever going to be a high pressure salesperson. I mean, if you think about lending money, it's really a sales job. We all have the same dollar. We all have the same way of delivering that dollar to you, whether it's in an automatic electronic transaction or in a check. The difference is, okay, what do you charge for interest rates? What type of knowledge does the lender have? What type of experience does your bank and management team have to differentiate the value that you bring in that dollar? So if I can go out there and not be the over the top pressure salesman that is telling you you've got to switch now, or you're not intelligent for using the bank where we're currently at, then you're probably going to offend more people for making a bad decision, rather than taking the approach that I like to take of, hey, I've got talent. I've got the same type of resources. If your pitcher gets tired in the 7th inning, I can be here and you can call on me. Or you know what, if someone goes down for an injury and you got to pop in, somebody retires, give me a call. But up until then, let's have conversation. Let's communicate back and forth. So that way I can get to know you better. You could get to know me better. And then when it comes time to work together, it's not a new surprise. There's not that learning curve to jump over.
Is that a bit uncomfortable for a farmer and maybe even a lender to do, just to have? I mean, from a lender perspective, I can see that I'm sinking time into something that maybe never will come to fruition. Obviously, as we both know, ag's a small community. So, hey, conversation, relationship, it'll come back eventually, some way, shape, or form. But I assume, especially for the farmer, that's got to be like, oh, now I have to have, I already kind of dread my one banking meeting. Now I could have 2 conversations with the banker,
Well, it depends. I mean, if the best examples that get off on the right feet is when you can provide value right away. So if there's a point in the conversation to where I can be a second opinion, or I can provide a resource or a connection right away, then no, it's not painful anymore. They know that I can be a resource. So then the phone calls are easier to make. I almost get phone calls more on the early side than they do to their actual lender when they're contemplating a new purchase, because there's still a stigma out there of, we don't want to disappoint dad. We don't want to disappoint the bank by maybe thinking we need to upgrade this planter tractor. And if I call my banker right away, what's his initial thought going to be? So I'll get the phone call first saying, hey, I've got the opportunity to buy my neighbor's tractor. It's got this many hours. This is what he's asking for it. Do you think that's a good deal, or do you think it fits in my operation? Because they know that I'm just sharing an opinion. I'm not officially giving them a green light or a red light, but now they've got information from me, a conversation with another banker, that I might say, hey, your lender's probably going to ask you, what is your trade-in worth? Or are you going to trade anything in or just an additional tractor to your fleet? I can help give them questions that they can be prepared to answer or already share with their banker before they even have that first phone call.
Okay. Makes sense. That makes sense.
Yeah. So it's not painful. I mean, it can be. I agree.
Yeah.
And those usually aren't the relationships that I get very deep with, because if they don't like divulging information, if they're not open to sharing it, if they're a really closed person in general, no, the banker on the bench theory doesn't work, and you move on. You go and try to put yourself on a different team.
I mean, kind of similar in this article, you would kind of want to maybe see or let them divulge some financial information, tax history, some different stuff, so you can actually have a meaningful exchange on the bench.
Yeah. Otherwise, you're just flying by the seat of your pants. I mean, I can ask good questions, and I can get really close to an idea of what your financial statement looks like just by strategically asking those in the right order. But ultimately, yes, if you can have the trust, we're all bound by lender liability laws. Like I said, we've got privacy policies to where I can't share your information anyway. But if you can divulge or even just give us copies of what you gave your banker, absolutely. The advice just gets a lot more pinpointed.
Okay. That is an interesting, not sales tactic. It's a soft sales tactic, just because you're involved in that relationship already. I love your LinkedIn bio, where you have to work with these relationships of straightforward answers and some degree of candor. I've had the unfortunate pleasure of, I'm not a farmer, but I have had 3 different mortgages as my wife and I have moved. And, the first mortgage you get, it's like you talk to the banker and it's like, yes, we can do this. This interest rate will beat all the others and whatnot. And it's those lenders, they tell me yes on the front end. And then whenever the documents come, and then when the organization comes, it's like, oh gosh, I should have just paid another $500 or whatever the fee was to work with this person, because it gives me a lot less headaches. So do you have issues how do you balance the candor of the sales pitch up front, or the conversation, I should say, versus?
Yeah, I would say that's evolved. That
Okay.
in my career has certainly evolved, and I bet you a lot of people would relate with that. So correct. Started off early in a community, started off in Adel. My wife and I moved there. We had no family there, no other connections. So it was a hungry mentality of, I need to go meet people. I need to get as much business in the door. I need to make the top of my funnel as big as possible so I can filter through everything. And at that time in my career, I would say there was probably some overpromised and under-delivered conversations. But that very quickly is something I learned from, because just like you were alluding to, is there's nothing worse than your customer sitting down and being disappointed because what you originally said isn't what's on the paper. Or even if it's in the middle of the process saying, oh, I'm not going to be able to close in 30 days. It's going to take 45. That just completely changes business plans and operations. So I learned really early on that those types of overpromising don't work. But then after the podcast started taking off, my time period just became more valuable. So I would say right now, the what I struggle with is balancing that of, I can be very straightforward and sometimes too straightforward because of the time involved. If I can tell you right away that it's not going to be something that I can do, I've been, I'm not going to say caught or known to, but there's been times to where when I reflect on a conversation, I wished I had maybe taken a little bit more of a gentle approach or an educational approach to explaining why the answer was no, then as quickly and as bluntly as I got to deliver that message. So that's probably the way my career is evolving is, right now, very thankful to have a great pipeline, very thankful to have a fantastic network around the podcast that keeps me busy, but I'm learning that having the right support around me will, continue to bring that customer service level way to the top rather than potentially cutting short some of the concerns customers or prospects have.
Speaking of some of that advice and guidance and kind of conversations you have with growers, I'd be curious what your approach is on whenever the grain marketing is brought up. Obviously, that's an integral part um, of, but as you guys talk about on the Farm for Profit podcast, it's a team. You got to assemble a team around you and what have you. How involved do you get in grain marketing?
Yeah, so the I'm a crazy, is for lack of better thesaurus term. The crazy thing about banking is we really aren't allowed as lenders to give direct advice. We're able to present options and demonstrate what profitability effects those have, or what cash flow effects that they have, because of lender liability issues, to where if I told you to sell your grain today and it went up 10 cents tomorrow, theoretically, due to bank regulations, you would have the ability to sue the bank for that 10-cent difference per bushel on your contract, because we advised you to sell and it was, in hindsight, the wrong decision. And there's a lot of court proceedings that have gone through in case law that really put an outline there to avoid us from doing that. So that's kind of where the advisory team approach in the podcast gets shared. Is the advice that I can give is situational, and it's not even truly advice. It's more, if you do X, it looks like Y. But if you do A, it looks like B. Or that's the impact that it has on your balance sheet, or that's what it looks like to your cash flow position. To where if you have a network of people surrounding you, like when you stated about grain marketing advice, built up a lot of relationships with a couple of different brokers in the area, a couple of different advisors that I can say, here's 4 guys, gals, companies that we've worked with or have a relationship with. I'd suggest you give them a call. Or, hey, here's a newsletter that came from so-and-so. It might be worth reading. I can't ever tell them to actively sell or forward contract. Now that comes is advice directly from the lender. So your question was, how much do we interact or direct on a daily basis? The same thing would come down to loan agreements. So the only place that we can provide guidance is in the loan agreement. So if you sign up your line of credit with us and you're a little bit more of a risky borrower, or you've got some habits that have caused you to hold grain longer, or don't exercise certain products, we can put in our guidance that we'd like to see X percentage of your crop sold by Y date. So still can't tell you when to sell it, where to sell it, or what tools to use. We can provide a guidance in our loan agreement that encourages you to pre-sell some of your crop. Other than that, really all we can do is seek your participation in crop insurance or some type of a guarantee program that helps secure our loans.
Interesting. Yeah, I've had a few conversations with different folks, and they're like, "Oh, the lenders, they really don't want to get involved, or they don't." Some people even go as far as say, "They don't know about grain marketing." I'm like, "Yeah, I'm sure that's the case with a few, but I think they do, but you don't understand the regulation that they would face." I mean, you're exactly right. Oh my gosh, can you imagine typing in an email saying, "Sell your corn today, 10,000 bushels," and then it moves, and the lawsuit
Correct.
would be Monday morning. Yeah,
and it wouldn't even have to go to the judge. I mean, there'd be so much case law preceding it that we'd just have to write a check.
Yeah. Can you go as far as to say encouraging making a grain marketing plan? I assume that would be okay, but the specifics of that plan, that wouldn't be something you could divulge.
Absolutely. I would say that our borrowers are even rewarded if they have a grain marketing plan. So every one of our interest rates is set based upon the quality of the borrower. It's a risk-based interest rate. I can't sit here today and tell you, if you do A, B, and C, you're going to get this interest rate. But I can tell you that the more you run your farm like a business, the more you're going to benefit on better pricing, because the higher the quality of borrower that you are, the lower the risk you are to the bank. Therefore, the lower your interest rate goes. So yeah, if a farmer, it's more of encouragement based upon how you can educate your customers on how rates are set. Nothing like coming into the lender and saying, "I think you're charging me too much," when your lender can spit right back at you and say, "Well, this is why." There's some that won't, but again, that's my candid personality of, okay, so this is what is causing us. Either your current position is too lack, you're lacking working capital, or historically you haven't hit grain sales as targeted according to our projection. Whichever it is, we can certainly give you guidelines as to what you can do to become a better borrower or less risky in the eye of a bank, therefore potentially lowering your cost on the interest side.
So let's say a grower comes in and he brings in all the stuff that you outlined again on this have a banker on the bench blog to you in the first year, and you guys are having a good relationship, and maybe come year two, interest rates moved up, and he's wanting to maybe see if he can get a more competitive rate, and he brings in a grain marketing plan. Is that something that the grower would potentially pitch to you, or would you bring a crop consultant, a broker or something like that into that meeting as well? Say, okay, this is Farmer Joe's goals, and they're both kind of pitching that to you.
Yep, I would state it probably depends upon how well the farmer can articulate that themselves. Yeah. If they don't feel comfortable presenting that, if they don't fully understand the terminology in the grain marketing plan, then yeah, it's great to bring in the team member or the company representative that is helping you. Certainly. I mean, I've encouraged, it happens very few times, to have meetings with the rest of our farmers advisory teams, whether it's a CPA, an attorney, an estate planner, crop marketing consultant. Very few ever bring in the agronomist, which is interesting. But I would state that the deeper you can build that relationship with your lender, the better the process is going to be for approvals, and probably the better the interest rate's going to be.
Okay. And do you recommend folks having a separate line of credit for margins and operating loans, or do you combine that together? I from what I've heard, it just seems like it's 50-50, even if that. I mean, some bankers like it, others don't.
Yep. So I would say, again, it's going to depend upon the borrower, because there's some that we would like to monitor more closely if we don't feel like they have as high of an understanding of the products that they're using, or that their broker is working with them on. And that would warrant a separate line of credit, because then we know that there's only a certain amount of exposure that can be set aside for these marketing tools. But if you're sophisticated, you're managing your operation, you've got a more business-like farm, then the bank could be very comfortable including that in the general operating fund. Now that comes down to you as the borrower, the farmer, to understand that that's the pool of money that you get. So whether that's spent on seed or fertilizer or paying cash rent or making other bills go, and you get several margin calls that eat away a portion of that balance, again, that's on you as the farm to manage that, and then manage your brokerage account right alongside.
Okay. And then do you guys get involved in all if something is a true hedge versus I'm just long and I'm more speculating? Do you get down to that granularity, or is it more of, hey, here's your limits that we've set up ahead of time? If you go over them, that's a conversation we'll have at that time.
Yeah, most of the time there's no control to the advances. So if they're used to advance for speculation, then that would probably be shame on us as the banker, because we are conservative on the most part, to where that's not something we'd be encouraging or really wanting to put in dollars behind. So that's where we would probably look at that as we'd try to monitor via reporting and get a pretty good feel for what's going on. But not that we can encourage or discourage, but probably would avoid speculating positions.
Now that we've talked about operating loans, obviously the next question that it's on everybody's mind is interest rates. I would be curious, what does a bank do, or what from your lens, as we're supposed to get a few more rate increases, like what's the bank doing to prepare for some of these interest rate increases?
So it started early on when we did our renewal reports. So as we were going through renewal for this year, we had anticipated some operating note line increases. So we did stress testing. So each bank's going to do it differently. Some would stress test on a percentage. So if you're currently priced at 4.5, what does it look like if we have a 10% rate increase? So another 45 basis points. If that's the level that they went, we've already exceeded the stress testing for this year in rate hikes. Some will stress test based upon movements. So if you're, what is a 1% movement? What does a 2% movement look on the stress test side? So that's what we started doing. And that gives you a little bit of perspective because you've identified which customers this is going to hurt the soonest, unfortunately. And then you've identified which customers are going to be able to withstand that. Maybe they don't borrow as much. Maybe they've got, a lot of equity on their balance sheet that you could tap into. But then depending upon how risk adverse the customers are, we actually set up some lines of credit at a fixed interest rate. They were priced much higher at the time than the variable rate that was offered, but they wanted to, protect themselves from multiple rate hikes. So instead, we issued an interest rate. It's fixed. It's going to be the same rate for 12 months. And we don't necessarily have to worry about the stress on this crop as we do what rates look like after the end of that 12-month period.
And you kind of answered the next question I was going to have in regards to, is that what you would recommend folks do as they're asking you like, oh, interest rates are going to go up again? Is it lock in that fixed interest rate?
Oh, you already know I can't recommend anything.
Oh, yeah. Sorry.
Yeah. But I can give you perspective is you need to reflect upon yourself. If you're laying in bed worried at night, or you're driving the tractor across the field and it's frequently popping in your mind that you're concerned where interest rates are going to go on your variable rate notes, then yes, you should looking to see what your fixed rate options are. If you are in a comfortable position, you don't think you're going to have to borrow anything on your line of credit until it comes time for fungicide, or you've got seed finance through the seed dealer that isn't going to come out until October or November when they call that balance, you have to look internally. So that's what I can recommend is see where you're at, see what you can stomach. There's going to be more advantages to those variable rate products because they're typically going to start off lower than when you get to a fixed rate because the bank's going to hedge their position. So you got to start off just looking at what you're going to be comfortable with.
All right. And the next question is a selfish one for me. Now, my bank is very quick to increase the interest rate on a mortgage, increase the interest rate on a loan. I am also a CD holder at that bank. Sometimes those CDs are a hair slower. What's the lag time? If you know, obviously you're not the treasurer of the bank, but.
Right. And it'll 100% depend on the bank and the bank board's goals. There's some financial institutions that are extremely cash heavy currently, which provides less incentive to raise interest rates on the deposit side. There are some banks that are combating these interest rates and overnight borrowing rates climbing because most banks will borrow funds overnight or short-term money from either the Fed or other banks. And if that's the case, you could see CD and deposit rates at that institution climb a lot quicker because they will price them just below what their cost is to borrow from somebody else. So it's really just kind of a watch and see game right now for consumers is, okay, we'll see who posts a CD special in the newspaper. And that gives you an idea of which banks usually borrow heavy or which are looking to expand their deposit base.
Okay. And I'd be curious to get your opinion. I've been to the ABA Ag Conference in Omaha a few years ago at a previous job. Obviously, those are kind of local regional lenders. The other large ag lender in the room is the Farm Credit System. What's kind of the difference between those two groups, if you will, or how do you guys differentiate yourself from the Farm Credit System?
Yeah, so any community bank is going to pitch their people and their service. So that's where you start off with. But ultimately, to me, the difference is the perspectives. So a farm credit system, my best way to describe it is it's a very formulated system. And if you don't fit the formula or don't fit the box for a cliche, it's going to make your approval process more difficult. That doesn't mean you're going to get told no. It just means there are going to be, extra required documents. There's going to be extra required meetings, which is fine because sometimes you can go through that erroneous process and end up with a very great financial product for your farm. Something that fits well, might be a longer term fixed rate, might be a larger line of credit, whatever it is, it just might be a little bit more work up front in order to get your loan approved and funded. Where for us on the community bank side is we know our competitive advantage has to be speed to market, flexibility, and understanding. So we rely a lot on experienced lenders and experienced staff that can either give you an answer really quickly or fund a loan really fast or give you a decision that's extremely clear and then price you into a product that is very competitive. Obviously, we don't have the ability to kick back a dividend based upon our tax structure, knowing that if we aren't competitive, we got to at least be close. Otherwise, community banks don't exist. But clearly, there's a need and a desire for the service levels and decision-making ability that we have because we all still have clients. So it's a good mix. Are there times that we as bankers wish there was more regulation on their side? Absolutely. But we also know where our competitive advantage is and where the true value comes from. It's not even fictitious. It means a lot to customers to be able to call up and know that they could bid on a tractor at auction today and get their answer, have it funded, drive the tractor home. So there's a lot of speed to recovery, a lot of expertise in these lending positions that see a lot of variety, and it goes to show.
Interesting. All right. Well, as we kind of wrap this up, my final question for you is, if somebody was just stumbling across back to your Farm for Profit podcast and looking back, what would you recommend kind of the starter episodes? Because obviously anybody knows if they jump into a podcast and there's already been 2, 3, 4 years, it's kind of like, if you jump in on the last one, unless it's like some very news heavy, just like headline of the day, you could be a little lost.
Yeah, and that's a tough question. I like the way you worded it because it's going to make me think. I would say if you wanted to start off with just digging into getting to know our personalities as hosts and wanting a lighthearted fun, we don't need necessarily an agenda, is I would start with any of the Farm for Fun shows. So those, we run 2 different formats. We've been nicknamed the Mullet of Agriculture podcast because we've got a little bit more of a serious, we call them our profit shows, the serious techniques where we're going to help you figure something out, a trend, a tip, a technique, a latest technology around helping your farm make more money or achieve higher levels of profitability is what we say. And then we cut loose in the opposite wake or the every other show into a Farm for Fun where we engage somebody that's in agriculture. So whether we found them via social media or we met them at a conference or they wrote into an email, we just learn about them. So those are the episodes you get to know our personalities better. So you get little stories from Corey, Dave, and I. You get to hear the inflection in our questions as to where we come from professionally and what we're generally curious about. So I would start hitting all the Farm for Fun shows. Find somebody that you like, a title that intrigues you, and then jump into probably some of the general profit shows. So I would say we had economist David Widmar on talking about avoiding going back to the 1980s. So it sounds like a really deep topic, but Dave himself has a podcast. He's a great presenter, and he did a really good job of putting things into perspective that we should watch out for and things that are not the same. So that would be a fun one. I already talked about Vance Crow's episode on negotiating. A lot of us already like Rob Sharkey, the Shark Farmer. We used him to kind of wrap up our 2021 year. So at the end of the year, we had traits of most profitable farmers or most productive farmers. So that's what I would suggest. I know that's a lot, but if you're looking for something in the cab, I would go for fun show titles. I wouldn't be afraid to listen to everything, but you start fun show, you learn our personality, hit a couple of those key ones, and then just start over again. Grab them one by one.
Cool. Well, hey, thank you so much for your time today, Tanner. It's truly a pleasure. And I hope we talk again soon.
Yeah, no problem. I'm glad that you had me. Go out there and find us. I appreciate new listeners. That's what makes these podcasts go. It's the fun parts connecting with people.